Successful investing is about managing risk, not avoiding it. Investing isn't about beating others at their game. It's about controlling yourself at your own game. If you are shopping for common stocks, choose them the way you would buy groceries, not the way you would buy perfume. You will be much more in control if you realize how much you are not in control. Intelligence has nothing to do with IQ or SAT scores. It simply means being patient, disciplined, and eager to learn. Before you invest, you must ensure that you have realistically assessed your probability of being right and how you will react to the consequences of being wrong. Losing some money is an inevitable part of investing, and there's nothing you can do to prevent it. But to be an intelligent investor, you must take responsibility for ensuring that you never lose most or all of your money. It requires a great deal of boldness and a great deal of caution to make a great fortune, and when you have got it, it requires 10 times as much wit to keep it. The intelligent investor is a realist who sells to optimists and buys from pessimists. Those who do not remember the past are condemned to repeat it. In the short run, the market is a voting machine, but in the long run it is a weighing machine. Life can only be understood backwards, but it must be lived forwards. Wall Street people learn nothing and forget everything. An intelligent investor gets satisfaction from the thought that his operations are exactly opposite to those of the crowd. You've got to be careful if you don't know where you're going, 'cause you might not get there. The essence of investment management is the management of risks, not the management of returns. The intelligent investor should recognize that market panics can create great prices for good companies and good prices for great companies. Individuals who cannot master their emotions are ill-suited to profit from the investment process. To be an investor, you must be a believer in a better tomorrow. The stock investor is neither right or wrong, because others agreed or disagreed with him. He is right because his facts and analysis are right. People who invest make money for themselves. People who speculate make money for their brokers. The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are likely to get you where you want to go. Never buy a stock immediately after a substantial rise, or sell one immediately after a substantial drop. A great company is not a great investment if you pay too much for the stock. In the world of securities, courage becomes the supreme virtue after adequate knowledge and attested judgment are at hand. Thousands of people have tried, and the evidence is clear: the more you trade, the less you keep. By developing your discipline and courage, you can refuse to let other people's mood swings govern your financial destiny. The true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operation results of his companies.